This year I'm going to share a third reason, our good old friend regulation, right? So you guys have all probably seen and heard and read and know about this, but the FCC has basically said as an essential service, we're going to regulate broadband like a utility. And the net of it is there's changes coming, most likely. Don't have a crystal ball, but I can tell you that 4 states have already started talking about and exploring regulating prices of broadband. And the Fed said states can do this as long as they're consistent with the regulatory framework, right? And this has huge, huge implications for all of us. So I'm going to talk about how we protect ourselves from regulation that can have a significant impact on your ability to sustain your business. And I'm going to start by talking about examples of change. But I'm going to focus on 2 examples, actually, from industries that are a little bit closer to home, highly regulated industries, and how winners in those markets responded to regulatory change and what we can learn from it. So the first one is banking. And there we go. In the 1990s, the banking industry went through massive regulatory change. They call it deregulation. That's the term we use. You're familiar with a lot of the acts, but essentially what they did is open up banking and said, hey, banks can get into financial services companies can get into banking, you can acquire each other, a massive opening up of the market and a massive disruption. So the winners in the marketplace, they did 2 things. So the first thing is, as they expanded into new markets, they invested heavily in platforms. Online platforms, digital platforms, they actually digitized their back ends. And then the second thing is they made moves to get into diversified financial services. And they said, I'm not just going to do traditional banking, but I'm actually going to get into these new services and new experiences that are highly profitable and growing, right? So let's look at a winner in this situation. So Chase in the 1990s went on an acquisition spree to get into financial services, which was really culminated with the purchase of JP Morgan. It's a $34 billion transaction, and it got them into all of these services that previously they were not part of. And the interesting part is if you fast forward to today, these services now represent more than 50% of their revenue. They're the fastest growing parts of their business and the most profitable, right? So think about it. Today we sell a gig. Tomorrow we sell all these other services, and they may actually be the majority of our revenue and our profit and our driving our growth. The second thing that this entity did now, JP Morgan Chase, is they invested in their banking platform. And these are actually views from their banking platform today. So those of you who are under the age of 40, probably your mind's going to be blown by this. There was a day when you couldn't just go online and move money from one account to another or change your investments, right? You had to actually get in a car and drive and go meet with somebody. Maybe some of it you could do over the phone. But this investment in the experience and their business efficiency and their back end, because again, this isn't just a website. This isn't just an app. There's massive back office efficiencies that are built in here. This is a major reason why people cite that JP Morgan Chase emerged healthy from the financial crisis and has continued to thrive, while other banks that didn't do this, well, you may not have heard of them because they went out of business or they got bought, et cetera. So implications, those are 2 things that they did to respond, right? Change their offering strategy, build a platform. So for those who are looking at value-added services, they have many ways to make margin. And an example of this that I think many of you will understand is the electric utility business. I think many of you are familiar with it. The electric utility business is highly regulated. The electricity, like broadband could be, is incredibly regulated. But many utility companies, they're getting into value-added services like monitoring and surge protection and surge insurance and outdoor lighting. In fact, we have utilities who are making 30, 40% of their revenue on these higher margin services. Why? Because they can't be regulated. You can regulate the commodity, the value-added services you can't. So if you think about this whole change, here's the good news. The first thing that we talked about as a step you need to take to be successful is a platform. And the great news is, Michael put up the numbers here yesterday, over 1,000 of you are on your platform journey. Adopting a platform to deliver broadband that's incredibly efficient and gives you the flexibility you need to go serve all of these different opportunities. So, first step, we're down that journey. The second one, which is then getting into the experiences, we have further to go. Right? Michael showed some of these numbers yesterday as well. The great news is we have leaders across this community who have succeeded and are succeeding doing this, but for many of us, this will be a next big step. But it's not that hard, and it can help protect us all from regulation.